Question number 2 of our exam paper from 2017. Now, what have we got here? We've got a lot of writing, but we're looking at, it says determine the total estimated non-collectibles, prepare adjusting entry to record the bad debts expense, identify the principles of internal controls that are violated during the above situation, and discuss the possible consequences. Alright, so let's have a look.
Mark, what does it mean by estimate of non-collectibles?
Estimate we'll work out what the estimate of non-collectibles is.
By non-collectibles?
Means allowance for doubtful debts.
Okay.
Yep. Alright, skim off the top. Proprietary Limited is a wholesaler of electronic products imported from overseas. The business was started by Morris owns the lot and has rapidly expanded to employ 10 people. There are 25 different products in the range and they are distributed around Victoria by the 3 warehouse staff. The goods are sold on credit with only a few customers on a cash-only basis. The credit terms are 110 net 30. The customers are mostly open air market vendors, so they pay their accounts by cash. The accounts receivable person is Nicole, who deals with these customers when they turn up to pay their accounts. She collects the cash, adjusts their accounts, holds the cash in a desk drawer at reception until Friday when she completes the banking. When she is absent from her desk, Helen, the receptionist, assists the customers with their payments. Nicole prepares the bank reconciliation, which Morris authorises once a month. As she has been with the organisation since inception, Morris trusts her and doesn't often look at the reconciliation, but just authorises it. Nicole then adjusts the accounts receivable balance and writes off any debts. I forgot to highlight that one as well. Now it says Nicole is off sick this month and Morris asked if you would assist with the accounts receivable function, which is determine the non-collectibles. So when we're determining the non-collectibles, they've given us information of our aged debtors. So we've got 95,000 in our current month. In our previous month was 22. Month before that was 5,500. So this is age, and this is telling me how much of each of those balances is not going to be collected. So let's go ahead and start making a table. So let's have a look. Question 2A. So first of all, my month of sales are May, April, March, February and January and older. And we've got dollar balances here, 95.22, so 95,000, 22,600, 5,500, 3,000, 1,750. And we're going to apply these percentages down here to them as well. So my percentages are 0.5%, 2%, 3%, 9% and 70%. So now I'm going to multiply each one of those. So my first one is, let's turn this one on, 95,000 times 0.005 equals $475. So this is what my non-collectibles are, 475. So let's say we've got 22,600 times 0.02 equals 452,000. 5,500 times 3% equals 165. We've got 3,000 times 9% equals 270. And my last one is 1,750 times 0.7 or 70% is 1225. Now, what I need to know is what's my non-collectibles. So I need to have a total on this. So let's go. So I've got plus 270 plus 165 plus 452 plus 4.
Right.
Yep.
For the first calculation, isn't it 4,750?
No, because it's 0.5%, not 5%.
Yeah, I understand. Oh, then
Alright. So 2587. So that's 0.5%. So not 0.05.
yeah.
And it's 0.005. So that's why that's 475. Alright, so that's A answered. So I tick off A. Now it says prepare the adjusting entry as of the 31st of May to record the bad debts balance. Now, let's have a look. Is there a balance there already? I didn't read anything up there. It's not telling me anything here. Here we go. As at the 31st of May, there is a credit balance in the allowance of doubtful debts account. The entity uses the aging of accounts receivable as its method. So, really what I'm looking for is I'm looking for the difference between 1,600 and my 2,587. So, this is B. I've got 2,587, which I've got from there, minus the $1,600 balance that's already there, which gives me 987 as my adjustment. So let's say my adjustment would be my doubtful debts expense. Here's my debit column, and there's my credit column, so I'm going to do it in my journal. Doubtful debts expense is going to be a debit of 987, and the next is going to be my allowance for doubtful debts. Which is 987. And that ticks off B. The last thing we want to do is C, which is identify the principles of internal controls that have been violated. And there's 5 principles of internal controls. The first one is segregation of duties. Now the segregation of duties is, we've got Nicole. She's doing a lot. She collects the cash, she completes the banking, she adjusts the accounts, she prepares the bank reconciliation, she adjusts the accounts receivable balance, writes off any doubtful debts. She's over this function too much. So Nicole handles too many aspects of the collection process and banking for that matter. Process. Now what's the consequences? Because it asks discuss the possible consequences here. There's fraud or undetected error. That's the first of them, segregation of duties. The next one is establishment of responsibilities. So my establishment of responsibilities. If we look at this here, Helen shouldn't be made responsible for helping the customers with their payments. So let's go, Helen Alright, so what could happen here is that there could be fraud. So Helen could just knock off some money and say the customer never paid, or undetected errors as well. Documentation of procedures. So I've got my documentation of procedures. What's happened here? Now, because Nicole, there's no trail of information, so there's no, she collects the money but there's no account of it. She doesn't give a receipt out to the customer. So it doesn't pay stamps invoices. Once again, there could be undetected error. Or fraud. Another internal control, physical, mechanical, or electronic controls. Money's left in. So the money is left in the reception in the desk drawer until Friday. So money. So possible consequences is theft. And my last one is independent. Internal verification. And that's down here where Morris doesn't often look at the reconciliation. Now, consequences, fraud, or undetected error. Let's write that again. Let's slide that out a little bit. There we go. Get the whole thing on there.